Welcome everybody to the Massive Masters Wednesday night case study. We're super excited that you've decided to spend your Wednesday evening with us. Remember, if you had a good time and you learned something, come back next week and invite a friend. All of this is educational content. None of us are professional real estate advisors, financial advisors, lawyers, accountants. Anything here is based on the best information that we have at the time, and our goal is to present it here for education purposes. Always do your own due diligence before doing any real estate investing. All right. In case you guys been living under a rock and haven't got the few emails that Massive Capital sends out, it's our AI bots that are sending all that out. So everybody knows that AI is changing the world. So many things are happening. We have a virtual conference on July the 12th. It's going to be amazing. There's a link here that you should be able to sign up for. We'll post it quickly into the chat as well. It's an all day of learning, interactive, always, as you can see with Massive Capital. Our goal is to put on things that we hope will bring you some educational value. So we hope that you sign up and that you join us that day. Don't forget to reserve your spot. And again, we always have a great time at our all-day conferences. We're going to talk about all kinds of ways that you can pire your investment secrets, revolutionize properties, get skyrocketing with AI technology. So Massive Capital has been doing quite a bit. And so we're going to be sharing what we're doing and what's working. So tonight we'll talk a little bit about Massive Capital, the massive value add investors and partners, I can speak, sorry. Tonight we're talking about development buy box. So I want to make sure I'm clear. When Massive Capital right now is talking about development, we are not at this point talking about multifamily development. We are talking about retail, lifestyle centers, places like that that are normally in shopping in areas and neighborhoods of where people are building and buying new houses. So we're going to talk about that tonight. As always, we'll have plenty of time for Q&A at the end. So a little bit about Massive Capital. As you can see on the map on the right-hand side, we're very Texas-centric. It's because most of us live in Texas, and Texas is a great place to buy real estate. So we have assets in Dallas, San Antonio, Houston, Pasadena, but we also have assets in Denver, Colorado, North Carolina, Atlanta, Georgia, pardon me. And we are looking for some retail development in the Tampa and Phoenix market. So those, and we'll talk a little bit more about that later on tonight. On the left-hand side, you can see that we do equity fund, triple net brokerage. Again, this is on the development on the retail side through our partners Realty One, triple net property management, land development, triple net construction. We have tech. And of course, for those that don't know, we have the Massive Masters. We are super excited about our Massive Mastermind. It is an incredible way to learn. We'll talk a little bit more about it. And I'm just going to add a quick link into the chat for those that would like to look it up. And you can see in the bottom that Realty One has about 290 million under assets under management. Again, mostly retail center. Massive Capital has 200 million. We have about 1,400 apartments. We have the X space and a few things. And we are the owner operator of Value Add Multifamily. And we are the developer of triple net retail town centers. So we do land development, building construction, and building operations. So this is a little bit of a summary of what's going on. If you remember, in 2023, we have closed on 15 properties, pretty exciting. And we're getting some green now up on the chart here. So we have an LOI accepted in San Antonio, an LOI accepted in Houston. We have a under contract of retail development in Richmond, Texas. We have a contract of a multifamily in West Texas. Both of those are 506B. So we're not talking about them at this time on here, but if you have not booked a call with someone from the investor relations team, you won't hear about these deals until they switch to be a 506C, in which case it might be too late and you might not be able to be an accredited investor, so you may not be able to invest. So always make sure that you book a call with someone from our investor relations team. And then we're getting super close on our project here in San Antonio, 204 doors. It's a great property. Things are going really well there. We have a 2.11 multiple equity, projected 18% IRR. For those of you that are new, IRR is a very important number. It's the time use of your money. So if we doubled your money in 5 years, this is what it is. It's 18% IRR. We doubled in 10, it would be a lot less. So this number is very important. We have a 7% preferred return, which means the investors will make 7% cash on cash before the massive capital partners make anything. And of course, with every multifamily development, there are tax advantages through bonus depreciation, which we're doing on this particular opportunity. And as mentioned before, 506C for accredited investors only. Make sure you book a call, don't miss out. And if you haven't booked a call, book a call anyways, because you're going to miss out on future deals. Super important that you set up some time to talk with somebody at Massive Capital. Our goal when you make these calls is to just help you learn more about how you can invest your money and you can grow it. Let me just tell you a quick story here. Put $100,000 in San Antonio. 5 years later, assuming everything goes right, we hit our projections, it will double to 2. Put it in the next deal. Leave it for 5 years. It will double to 4. Put it in the next deal. Leave it for 5 years. It will double to 8, 1.6, 3.2 million. So think about this. $125,000 or $100,000 investment, assuming it always doubles, assuming you have no tax complications, would $3.2 million change your family's life? I think it would. And some of you are not as old as me, so you've got 25 years left. Mike and I don't know, we're maybe together. I'm only kidding, but I know Brenda, she's got at least 2 times 25 years ready. So imagine how independent, financially independent Brenda's going to be by her real estate investing. I wish I'd have started at her age. So anyways, my little quick math lesson here.
100%. Love it, Trevor.
Yeah, buy real estate and wait. Don't wait to buy real estate.
I was gonna give a shout out here to see who found any of our typo for you know, we not a typo, we put a little bit of a special spin on this one. And if anybody caught that
I didn't.
on this slide. I love it. So if anybody catches it, drop it in the chat.
Awesome. So one thing that's super important with Massive Capital is that you learn by actually doing. So again, one of the features of being connected with us, that property I talked about in San Antonio, all of our partners, all of our friends, they came and they did a due diligence tour with us, actually learning by doing. I know a few folks on this call were on that particular training. It's amazing. Nothing beats being able to actually do it, to learn it. And again, we always have lots of places where you can learn. So you want me to keep going, Mike, or are you going to hop in here?
No, you got it, Trevor.
Awesome. So one of the things with Massive Capital, with our Massive Masters, this is a running chart. So right now we've underwritten 148 deals. If we bought it, it's about a $1.5 billion. I can't wait till we get up into the $1 billion mark. Again, you'll see in the map, we're very Texas centric. You can see how many deals we've been underwriting. But what is super important is we don't only just underwrite these deals. All of these deals get loaded into our program called Monday.com. all of the analysis gets loaded for every city. So when you're part of our team and you're looking to do a deal in a particular city, assuming we've been doing some underwriting in that city, there can be dozens of properties that we've already done financial due diligence. Just think about how much that speeds up your underwriting. We use RedIQ, which is a very good program for uploading and matching all the documents. One other thing on Monday.com, oh, sorry, Client Harbor as well, is our CRM system that we all use at Massive Capital. And so you definitely have to tune in for the AI to learn a little bit about what we're doing. But it's super powerful way for us to be able to communicate with people and just to keep records of all of your investors, all of your things that you were doing in your contacts. And we
this
also
was
use
on our
CoStar,
tech
LoopNet, and
side.
Reonomy.
Go ahead, Trevor, sorry.
Yeah, that's okay. You go ahead now.
Yeah, no, I was just gonna say here a little more on the, just continuing, everything, we're really, and we've actually got a few more technology items I realize that we need to include here that we involve in our whole process. This is a lot of the underwriting, but also, looking at our comps, looking at sales, different things with Reonomy, CoStar, LoopNet, which the CoStar, LoopNet all being the same company now. And then we have a number of other platforms between our investor portal and our other underwriting tools that we make available. So you want me to, you want to go here?
Yeah, you
Okay,
go ahead.
thank you. All right. And so when we talk about, this will tie into the rest of the thing about, okay, we're looking for developments. And when we're looking for a buy box for developments, we're also looking for partnerships. So in those partnerships, we start in acquisitions, you got to find the deals, and that's one of your partnerships you need to be looking for really is around the acquisition. And then everybody, think about like all of these different groupings in here is actual things that need to happen and people that need to do these on your team and building out your team, both on the acquisition and the risk and the risk capital that happens, the physical inspections, the contract to close process, and etc. And then you continue the process after you found that deal, whether this is a development or multifamily, the process is still very much the same. You're going to need somebody with the balance sheet, a loan guarantor, and that has experience. And so you can have all the money in the world sometimes, or maybe not all the money. If you had all the money, probably you can do this, but you can have a lot of money, but if you don't have the experience, the lender and the agency, especially like a Fannie or Freddie, may not underwrite you the same as if you've already done 1, 2, 3, 4, 5 agency loans. So experience is important also. Obviously, this is one of the big players in everybody would say, hey, you got a good deal, equity is going to come and follow you. It will come, may not be quite as fast, but it'll be coming very quickly. But it's still more work right now. And then asset management is the wrap up of everything, which is really the next 3 to 5 years of operations that ongo during that period, and so forth. So those are the key things in building the partnerships, and this will tie into really our buy box discussion as well. I saw Al put in, and that could also be a typo, 2022, 23, but I think that was our deals for 15 and the 15 deals we did in 22, 23. The typo or the thing we put was, instead of investors, we were looking for accredited inventors. So If you're an accredited inventor, you can join, but also accredited investors can join us. So that was the one we were looking for, if anybody saw that. We're gonna play that word search game a bit. So when you're looking at your partnerships and who you're working with, you know, one of the things is at Massive, we went through and we paid for a lot of memberships and partnerships, and we still though ended up doing a lot of this do-it-yourself process. And what we do now with our partnerships is we're trying to be more in the done with you, and some of it even done for you, but mostly done with you, and letting everybody that joins or partners with us to be, you know, keep your main thing, and that way you can focus on the thing that is important to you and the thing that you're good at getting the deals done. A little quick thing I am going to share. This is a little pitch on our Massive Masters group. We'll not stay here long, but you guys can get an idea of everything that is included in that. Everything from the, like we talked, the tools, the deal flow, the 400 plus of assets that over, you know, that've been underwritten, all of the recordings of all of the everything we do, underwriting calls, the capital raising calls, etc., and then tools. So those are the key things in that program. Let's get along into the main part of tonight, and thinking about like when you're underwriting your locations and everything. Right now, one of the things, like especially depending, like, hey, for us, I think, I mean, we're in a fortunate, if we're in Texas, we can underwrite locally and have a lot of deals locally that fit a lot of good markets for investors and people that want to buy in Texas, for example. You could be in a market that maybe you're not as excited about. And I challenge everyone to kind of follow this process on the right, is start simulating and purchasing outside of your market. Build and look at the underwriting the cities, the different cities, and find some cities, find 2 to 3 cities that you really like, underwrite them more and more, go into them deeply. There's a tool we love to use, justicemap.org. That gives you some great data on the economics in the markets, and you can dive in deeper as you want and see, like, how does the submarkets look on, and it's not just like looking at a radius, it's looking at different sections in there to see where the different income streams are, and and you can look at properties in those income streams and target yourself. So look at the detailed level and challenge yourself to look outside of, you know, your market may be perfect, or look at a couple other markets and like dive into them a little deeper, and then build you a team that would support you in that MSA or that location. So this is one of the things we've actually done as well. We did this in the North Carolina market and have brought on a team. We have a great team, Bobby and John, part of our team there. They lead, run the deals. We give support and have, you know, an awesome, you know, opportunity there. The same in Colorado with YouÂ'll. And then in Georgia, we have a couple groups that we work with, Ravi primarily, and George and Andrew with Ardent. So we follow this process and continue to look at this differently than just doing only our own location. But you still want to get a really good boots on the ground person. So when we talk about what are we going to buy, we talked about this the last couple of weeks, and I will not spend much time because we focused on the right side of this a lot. Uncontrollable controllables, revenue and OPEX, and what those were. What we're going to focus on more today is again back to the location and population and the type of deals that we're looking at doing. So with that, when we're underwriting, and now we're talking triple net. So today we're talking about development, and we're going to talk about triple net development primarily. So triple net again is, these are retail opportunities. These are not your multifamily opportunities. So these are commercial retail deals, and means, okay, everything's, the triple net means that the taxes, electric utilities, and insurance is paid by the tenants. So as an owner, we have our bottom line changes on that. And some key things that we look for in this when we're looking at deals, okay, there's the lender side. One of the key things on the lender side is that usually these types of deals are full recourse. So we'll go in and do this, and this is the value add we give to the deal, is that we'll take care of all the lending process. What we're really looking for is opportunities where the JV land comes as an LP into the deal. So the JV, so if you've got land, 5 to 10, 40, 5, 10, 40, 30, 40 acres of land that we look at it together, we come up with a plan and lay out the plan. We do some, and I'll show you guys what our process is a little bit as we go through that with architects, and then construction, or engineering, and then the next, so we go through, and then the permitting and so forth in the process. So we're looking primarily at JV opportunities is a big one. And then when you're thinking on the equity side, and Trevor, you can talk to this a little bit, on the equity side of a development, that we focus into 401ks and SIDRs for that as well, and we try to put for development opportunities. You want to talk to that a little bit?
Yeah, I often, if you have a choice, if you have some money in a retirement fund and some money in cash, I always advise people that you should use the retirement fund for new development. And the reason I advise that is, if you use the funds from your retirement for multifamily, you will miss out on using the bonus depreciation because it's already in a tax harbor. You can't have a double tax saving. So the only time the tax saving comes is if you end up having to pay something from UBIT, it's called, at the end. You can offset some of it there. It doesn't mean, oh, don't use retirement money on multifamily. It doesn't mean that at all. If that's where you'd like to invest, I have a mixture. So with my retirement fund, I have a couple of multifamilies, but most of it is anything to do with new development. New development often has a higher rate of return, a lower turn rate. So it may be 2 to 3 years versus 3 to 7 years on a multifamily. So you're turning your retirement funds more regularly. And again, it's already in a tax deferred environment.
Yep. Thank you, Trevor. Appreciate that.
And one of our events in July, we're talking more about using retirement funds. I think it's we do have Massive Masters is about that, because it's sort of misunderstood. A lot of people don't know how powerful it is.
Yeah. Thank you, Trevor. Appreciate that. And then when we talk about location strategy, so we're thinking now hard corners, fronts, and master plan communities. And then another is we're focusing in, when we're looking in Texas, we're going to be looking at Texas-based chains. And they're not going to be necessarily the larger chains, but they'll be fairly big, but more of a local Texas base that we have good relationships. And that comes into our partnership and our sister company, Realty One, that has that database of those tenants that we'll be looking at, because once you got those tenants, the people that come and eat there and use those services are going to want, you know, they're going to want, they'll be knowing them and want to have that. On the tenant base, again, we're looking at a lot of service oriented type. And again, this is based on our in-house data from Realty One. We provide the in-house construction, we have the in-house cost management, and then in-house leasing. So this all of this is also a large component for us. It doesn't mean that we will not look outside of Texas. This is just means this is where we look for us primarily initially. If there's a nice large deal to be done in another state, and we've worked there before, and there's a lot of states we've worked, Georgia, New Mexico, Colorado, North Carolina, Oklahoma. So many states that we've worked in and can continue to work in, but we don't want to go for a smaller, larger deal that we would want to go for that. Alrighty, so I want to give a little bit here of the pipeline of our retail development opportunities. And these are kind of top to bottom of kind of, I would say, as far as progression of the deal. So it's not by sides, it's more like progression and timing. So Pine Market is in North Houston. It's on 36 acres. And it just gives you an idea of the size of these deals, the total capital required, general equity required, and then the estimated value after the finishing of the operations. And then we got a little status here, and then what the opportunity is currently on these deals, on these opportunities, retail developments. Now we think of this as town centers, and we'll show some more examples. When you think of, because this is 425,000 square feet of building space, it's some mixed use. It's also got some retail with the apartments on top. That's the mixed use. It's got some just standalone restaurants, you know, and then it's got your nice little parks in the middle and everything like that.
And
so this is our current pipeline. Ellison, I'm sorry.
Too, I was going to mention, Mike, a little bit on the opportunity. So this whole first phase that is 85% done was done with a series of investor capital, construction loan debt, which you saw in the earlier one. You know, you're talking 8, 9, 10, 12%, sometimes full recourse loans, not as friendly debt as you might imagine. And then once it gets fully stabilized up and operating, that's the buyout and recapitalized. So that's where you get into steady, long-term, low interest rate debt. And then it switches from, you know, double or almost doubling your money quicker to a little bit more of a slow burn, but also has a very good cash flow to it. So two real different investment opportunities. But it's a great way to, you know, and then you own it for 5 to 7 years, it's brand new, and then you sell it to somebody who's a value add repositioner of retail space. And that's kind of the third turn that happens.
Yeah.
So just to be sure they understood that bit.
No, that's great, Trevor. Thank you. And then the 2A, 3, and 4 are ongoing. These are fully funded, ongoing projects. Construction is ongoing for these currently. And Conroe Commons, we talked about it last week. Harris Ridge is one we've talked about with Massive quite a bit in the past. That's over in Austin. We got a couple slides on that. And the 7 and 8 are just newer development opportunities. Candela is one in Richmond, Texas. And then Fate 1 and 2 is couple of properties that we own as massive in Dallas area, and these are mixed use opportunities with the retail and the apartments on the top type of opportunities. So these are currently ongoing that we'll probably be opening funding for potentially. And then the last two, Plow and Liberty Hill, are further out. So the reason I mention these are really longer plays that you get into these, and these are, you know, some master plan communities that you're working with developers on. I'll come back and see if I can, let me see. I don't know if it'll go to it. Yeah, I'll come back to so this is our Harris Ridge. I got a couple slides here, Trevor. You want to talk a little bit about Harris Ridge?
Yeah, this is Harris Ridge, one of my favorite projects, 20 minutes from my house. So I get to go there and get kicked off the construction site. No, they finally recognize me once in a while now. I go there, try to get some videos and photos. So again, this is an area in Austin that they've built about 60,000 homes in this particular area. So you can see all around it, there's a lot of homes being built. It's very close to the I-35 corridor. And then if you look to the left, those are all businesses where people come and work. And then I think we have a future side that talks about industrial warehouse storage. But what's happening is there's nothing in these neighborhoods. So when we're building these retail centers, it is what I'm going to refer to as your local retail center. So it is things that you normally wouldn't buy at a grocery store. You normally wouldn't buy through Amazon.com, and you wouldn't buy from a big box retailer. So it's a little bit more specialty. And again, the reason we go for Texas brands is it's something that's easily recognizable too. So it's not necessarily national brand locations, but it really works in these areas. This particular one is about 16,800 square foot, fully funded. Here's some pictures of it here, of what it would look like, the conceptual. The nice thing about this is we're not the exact corner, but we have egress from both corners because there's an easement from the back of the other retail next door. So again, that's very important, right? Nothing worse than having to loop around on a busy intersection to get into your favorite store or favorite restaurant. So super, super powerful way for people to be able to grow money. And it's simple construction. Doesn't mean it's easy, but it's simple. So it's concrete, steel, and then the units are subdivided depending on who signs up. And then the tenant is responsible for the interior fit out. So it's a very simple way, but very powerful way to be able to invest in commercial real estate.
Thank you, Trevor. Appreciate it. We went over Conroe Commons last week, so I'm just going to jump through it. But again, it's focused. It was just focused into a corner here front. We were able to get this one piece, and then again, you've got like apartments and things around here. So this is driving you to understand the buy box of retail, which is different than the buy box of multifamily. These are a couple, now the last few are a couple newer plays, and then we'll go to the Q&A piece for tonight. Again, this is a master plan community here called CapitalÂ. The layout of the plan, it's a little fuzzy here, but is basically two buildings. And then what's going to happen is between these two buildings here is actually going to be a park. This is now redesigned. This is going to be a park between here. And you get a little bit of the concept of the outer. So you get an idea here looking at this versus this. So you start to see a little different design style depending on where we're at. So a little more, you know, kind of, I'd say, newer design versus the little bit more the other design style that was there. So this again, this is a 60,000 square feet. So we went from up here with 10,600. Then we went to Conroe, we're doing 23,000. This is 60,000 square feet. And then we move into these town center areas. Ooh, oh, that's really blurry, but you can get the idea here of the town center concept that's going to be taking place. And again, what's happened is you've got outside of here all of these houses that have been built. And then they carve out this one center section to build the town center in. So this is what the layout of the town centers are looking like. And you see here in the middle, the park areas that they have and some other, green areas in here. And then the last one here, Ellison Town Center, a nicer looking, cleaner here. But you get the idea of the area, what the downtown part looks like, and the layout again of these town centers. And now we're talking about 400 to 700,000 square feet of retail and mixed use space. So with that, I'm going to wrap up. Is again, what we look for in our buy box is partners with retail JV developments, Class A locations, 10 to 40 commercial acres, frontage road, hard corners, and then we do all the service for you, meaning we'll take care of the debt, the construction, the leasing, everything else. On the other side of partnering, we're still, doing new acquisitions. We're focused into distressed, off-market opportunities, 1980 plus, 150 units plus, 1980 and newer. Deal doing consulting services. So we also provide consulting services basically along the line of our massive masters, but we'll do full service as a consultant onto the deal for you if that's what you need. And this can include the debt and loan guarantor into the package with that. Alrighty, so this one I'm going to just wrap this up with our massive masters. It is a private community. It is a little expensive. It is challenging, and it's a time investment. And it may not be for everyone, but that's okay. And we are looking for those that are moving along and want, are already along the way or wanting to progress further along the way, or have the dedication and time to spend on doing more in the multifamily. So you can connect with Trevor or anyone on the team if you want. Oops, I think that's it. Oh, there we go. I will stop there, Trevor.
Awesome. Thank you. If you want to stop sharing here quickly, I just have, I don't know, I don't often share here, but, and I don't even, to be honest, I should know more about what's going on, but we're going to stop for like a breaking news, like where you break into a previously broadcast thing. And I don't know how she did this, but I just got sent this reel while we were doing it. There is Jasmine on Times Square with a she billboard. I just got tagged on a reel. So for anybody who hasn't gotten involved with she, you're missing out. These are some powerful ladies. I don't even know the full story, so maybe Brenda can tell us how all of a sudden we're on Times Square. But if you're not hanging out with these ladies, you are missing out. They are amazing. So Brenda, do you even know how we got on Times Square? I don't even, I know it was, I heard something, and I know she's on vacation.
I actually don't know. I just know she was on vacation. Then I got tagged on it too. And I'm like, oh, this is awesome.
So anyways, I just put a link in the chat for the ladies. They meet the second or first and third Tuesdays of the month. Oh, if my little clicker will go, I'll make sure you join. So I hope everybody enjoyed that. Who wants to buy some retail real estate right now, right? Come on, let's get going here. It's an amazing category. It's something I'm super excited about. I really enjoy it. Any questions? Feel free to unmute yourself or put them in the chat. Man, Mike, you did such a good job.
Yeah, it's pretty, it's like I said, tonight was just going to be a little bit of show and tell, and of what's been what we've been doing, what is out there, what's available, and showcase a little more, and get into these types of deals completely different from our multifamily. So we're not moving away from multifamily. So multifamily value add, as Trevor said in the very beginning, is one of our main core pieces that we'll continue to do as massive capital. And then the development piece is our other business with our sister company, Realty One Partners.
And I know in other presentations, I've talked a little bit, and so have the partners talked a little bit about when you get involved in a lot of investments, you always really want to start looking at having a little bit of diversification within your investment. So I always talk about a few things. So I talk about investing in different asset classes. So clearly value add multifamily is an asset class, retail is an asset class. We're not heavily involved at yet this point in any storage, but there are definitely options. And you also want to always look at risk reward when you're investing. The way I look at it is it's like playing a baseball game. The person who goes to bat always looking to hit a home run never wins the World Series, right? They never win the games. It's the folks that know how to get somebody on first, get somebody on second, and then pick the right time to go for a good investment and balance out their portfolios. So again, those that don't know, I'm in 31 different syndications, 20 as a passive, 8 have gone full cycle, and 8 since I've joined Massive Capital. And if you don't believe that joining a group can change your life, talk to me about it. It's changed my life. So there is power. I know we have Selwick here. There's power in people being able to get in these groups.
Oops, sorry.
Oh, there's the video there. It's awesome.
I didn't mean to. I was waiting for you. I hit share.
Oh, I'm good. That's okay. I'm not that exciting.
No, you are. This is the oops, this is the Pine Market product that we have in Montgomery, Texas, just north of Houston. Let's see if
that was a lot of fun. We went and visited that.
You see it okay? This is kind of cool. I'll do this and then maybe. This is their Christmas celebration.
That's awesome. I've not
So it
seen
just
that one.
gives a feel of, you know, what you're creating in a community, right? And we try to do it when we do value add on our multifamilies, and we do similar things like this. Maybe not that same scale, but a little, you know, events for our tenants and everything. So that just is an example of what the Pine Market looks like and what is happening there in those town center type spaces.
So currently, we've been looking for joint venture deals in obviously Texas, Arizona, North Carolina, the Denver market. We are interested in triple net in the Florida market. So again, all pro-business, pro-growth, or that have good growth states. Because again, normally when you're building new retail, you have to follow housing development. So people have to move into a neighborhood, then you open up the retail. If you just can't open it up in the middle of nowhere and wait for housing to be built around it, it's not sustainable. So it has to be in the path of growth. You know, and even that other project Mike mentioned that we're working on up in Liberty Hill, it's literally 20 minutes the other direction from my house. So I'll be surrounded by fun.
Yeah. Yeah, that'll be an awesome one when we get to that one.
Yeah, and again, anybody who knows anything about Austin, it's growing in every direction around Austin, and it's definitely growing up in that category. I always joke, I wish I knew now what about 10 years ago. I used to drive by cows and fields, and now I drive by 30,000 apartments sitting next to a light rail stop. It's incredible. And then again, all that new retail is filled in all around it as well, on top of the multifamily. There's still a lot of places that need something developed. Awesome. Any questions? Appreciate everybody showing up. Again, as I mentioned at the beginning, if you learned something, you had fun, I want to see you back here next week with a friend. So I'm sure at least a few of you have at least one or two friends that might enjoy this.